So my one simple goal with this video is to help you profit heading into tomorrow so that you can then use some of those profits to buy something that you need on Black Friday, right? So I'm going to show you exactly how you can determine if the bulls or bears are in control heading into tomorrow's price action. What I want you to understand is the SPY is trading at a key critical make it or break it level that correlates with one of my gap trading strategies. And I'm going to show you how to determine if the bulls or bears are in control heading for tomorrow, whether you should be buying call options or buying put options, where to enter, where to set your stop loss, and where to set your price targets. I also want you to understand the following. We're going to see low liquidity and low volume heading into, the rest of this holiday weekend. We are also going to see the market closing earlier at 1 p.m., right? And also historically, we have seen a lot of sell-offs on Black Friday. So those are just three things that I want you to keep in mind heading into tomorrow. Now, let's get into the price action analysis for the SPY. So like I said, we have one simple goal. We want to determine the trend. We want to determine who's going to be in control for tomorrow. And then we want to capitalize. We want to scalp. We want to profit off of that trend. And I'm going to show you exactly how you can determine that. So this is what I want you to understand in terms of my gap strategy, right? There's a strategy called a gap breakout. What is a gap breakout? Well, a gap breakout is when you find a stock that gaps down. What is a gap down? A gap down is when a stock opens up lower than it previously closes. So in terms of SPY, some sort of news came out or something happened during extended hours that caused this to gap down on this day. So what you're going to want to do from there is you're going to want to wait till the market closes, and then you take the high of day. The high of day is 403.10. Why is this red line so significant? Because if the SPY breaks above this line and turns that into a support level, 403.10, as you could see on the daily chart, there is no resistance. It is going to start to break out. So a gap breakout, besides an all-time high breakout, is the only breakout where if it, breaks out and reacts as a support, there's no resistance above for a short period of time, meaning it's going to start to break out and fill the gap. There's a gap to fill above at 410.97. So how do we determine if the bulls or bears are in control? Well, what we need to do is we just need to study this level. And what is the zone? What's going to be the zone that I want you to study heading in tomorrow? Because this zone is going to be the money-making zone. It's going to be the previous closing price, $402.42, to the gap breakout level, 403.10, right? So if this zone is breaking out, forming support, forming a floor, you see it break above, it's going to have a small pullback. If it's bottoming at or higher than the previous resistance at 403.10, it's bullish, it's going to run, it's going to start to fill the gap, right? Now, let's go over the inverse. What can also happen is, this would be the inverse, it can have a gap fake out, which means it hits 403.10, forms a roof, forms resistance, forms lower highs, and then say it cracks below the previous closing price of 402.42, starts forming lower highs, starts breaking down, goes under 402, then the bears are going to step in. And as you can see right here, when 403.10 reacted as a resistance, this sold off very, very hard, right? So that's it. It's simple. All we're doing is we're simply determining if it's forming a floor or a roof in between that zone, right? So if I see it break above, I'm going to wait for a pullback. If the pullback is at or above the previous resistance level, 403.10, it's forming a floor, it's forming strong support at that level, forming a floor, then I'll be interested in buying call options. Now, if we start faking out and we crack below the previous closing price and SPY goes red under 402.42 and it's forming those lower highs, I will look to play put options into the roof, right? So that's it. You just got to study the reaction. Wait for it to play out. Wait for the zone to come in, wait for the confirmations to come in, right? So what I'm telling you is wait for it to break out above 403.10. And then if it has a pullback and you see it's bottoming at previous resistance, forming strong support, looking bullish, forming bottom wicks, green bullish confirmations, buy calls. In terms of puts, wait for it to fake out at 403.10, wait for it to crack 402.42. You see it go under 404.42 and it's starting to form lower highs, form resistance, then scalp the puts. Wait for simple confirmations, right? This is very, very simple. This is what I want you to do. I want you to tune out everything else tomorrow, and I want you to focus on the two things that I just said, right? So if you see it break above 403.10, it's going to have a little breakout. Wait for it to pull back. If it starts to consolidate, form bullish candlesticks, wicks at 403.10 or above 403.10, buy into the pullback, buy into the consolidation, buy into that bullish candlestick confirmation. If you see it, ride it up a little bit, take some profits, make a quick scalp. If you see it go under 402.42 and it's breaking down, it's forming resistance, it's forming a lower high, buy the puts into those green candles at the lower high, buy the calls into the pullback into those bullish confirmations if it's forming support at resistance. That's what you want to do. Simple confirmations, man. Calls right here on the pullback if it's forming bullish confirmations, and then puts right here on the pop back at that lower high if it's forming resistance in a roof. Simple stuff. Wait for the confirmations. That's how you absolutely crush it heading into tomorrow. Now, let's discuss some price targets. So we went over the desired entries and what to look for. Now we're going to be going over some price targets. So in terms of puts, if it reacts bearish and if we're going to be buying put options, this is what I want you to understand in terms of overall targets. You're going to want to be getting out towards this like 401 to $400. 401 to 420. I'm not aiming super big. We get in, we get out, same day expirations, make it quick 20, 30, 40, 50% plus, right? So the targets would be 401.20 to $400. Now in terms of the call side targets would be 404 to 404.75, right? You don't want to aim too big. It's going to be slow. There's going to be lack of volume. There's going to be lack of liquidity. The market's going to be closing, earlier. So just wait for the kind of, in a sense, we know the channel, we know the key levels, wait for the confirmations. You need to do a good job of getting great entries and studying the channels and studying if the bulls or bears are in control, right? It's going to be not as volatile. So don't be aiming for super big moves. If you get like a 50 cent to $1 move in your favor, start locking in profits on those option contracts. In terms of the strikes you're going to want to go with are at the money. So if SPY's at 402.30 and I think it's going to drop below that, I'll go with a 402 put strike. If SPY's at 403 and I think it's going to go to 404, I'll go with a 403 at the money strike, right? And just scalp in and out, have your trade, and then just call for the day. Let's keep it simple, man. This should be simple. This should be fairly simple. And we should be able to do very, very well tomorrow. I think tomorrow is going to be a great day. So that's my main focus. I'm not interested in doing anything else tomorrow. That's it. That's my number one focus. That zone, determining if bulls or bears are in control at that zone, taking advantage of it. If I see previous closing price breaking down, reacting bearish, forming lower high, boom, I scalp the puts at that 402 zone. If I see it breaking above 403.10, it's forming strong support. Boom, I scalp the calls like that. Simple confirmations. What do we know right now? Well, we know right now that SPY is trending up a little bit. It is forming a floor at 403.10, but what's going to matter is that pre-market confirmation in the market open. So again, I explained to you what it is to look for and what to focus on and how to determine if the bulls or bears are in control. I want you to take advantage of one of those confirmations. When you see the confirmation, whether it's a roof or whether it's a floor, and you have high conviction in it and you get a strong confirmation, I want you to take advantage of that side, whether it's calls or puts. I want you to scalp it. I want you to get in. I want you to get out. It's a little bit too early to say who's in control, but honestly, it shouldn't be that hard to determine, right? And never be stuck on one bias, never be sold on one idea. You must adapt, right? If the roof is turning into a floor, you must adapt and get out of puts. If the floor is turning into a roof, you must adapt and get out of calls. And you could always switch sides. Not that you have to, right? So these are the things that I want you to understand heading into tomorrow. It should be a fairly simple day. Just don't expect super wide range. Just look for the overall channels at those key levels. And for the bears to truly take control tomorrow, they're going to need to crack 402.42 and turn that into strong resistance. They need to do that, and they need to do it quickly. If they cannot do that, then SPY is going to continue to run, and it's going to continue to squeeze those bears, right? What you have to understand is there was a gap to fill on the SPY at 410.97, right? Right here, it got too high at 402.30, and it started pulling back. As of now, it is trying to fill the gap, right? But in terms of pattern recognition, we know what to look for. We are well aware if it has a bearish reaction, we're going to be scalping puts. If it has a bullish reaction, we're going to be scalping calls, right? So this is going to be a fairly simple game. Now, what is the daily chart telling me in terms of like, well, how does the daily chart look? I would say the daily chart, it's a little interesting in terms of how this daily chart is looking for the micro, right? I'm not too focused on this right now for the micro. I'm mainly focused on the information that I just gave you guys. But in terms of how the daily chart looks, it could go either way. I'm seeing some patterns where it could have a little micro sell-off, and I'm seeing some patterns where it can continue to run. Obviously, it's due for some sort of pullback. But like I said, if 403.10 turns into support, it's going to be game over, and those bears are going to get squeezed, and that gap is going to start to overall fill. So just don't be delusional. Just understand, okay, 403.10 is breaking out. It's forming support. It's looking bullish. Let's not buy puts. Let's focus on the calls. And if you don't want to buy calls, then don't buy calls. Okay, 402.42 is breaking down. It's forming a roof. It's looking bearish. It just went green to red. They failed to break out at 403.10. Last time they failed to break out at 402. Nice sell-off. Last time they failed to break out at 403. Nice sell-off. Let's scalp some puts. Simple. This is simple. That's what I want you to do. Tune out everything and focus on the charts, focus on the price action, focus on the candlesticks, focus on, is it forming a floor? Is it forming a roof? Is it going green to red, turning that previous closing price 402.42 into resistance? It's looking bearish, let's play puts, right? This is a simple game, man. All we're trying to do is determine if 403.10 is a fake out or breakout. For calls. All we're trying to determine for puts if 402.42 is a breakdown, green to red move, resistance, lower highs for puts, right? Simple game. I will have a much better reading confirmation heading into market open. And this is all I'm going to focus on, right? This is my number one focus. If I take any other trade tomorrow, it's just a pure gamble, right? So if I'm doing anything else besides this tomorrow, it's just a pure gamble. It's not the best setup at the best price. I've explained to you the key make it or break it levels, 403.10 to 402.42. And I explained to you what it is to look for, right? Also heading into next week, this gap at 410.97 is going to be a key level to short if we get a negative reaction. If you ever see SPY drop back to 374.13, we're going to be looking for a bullish reaction for calls. So yeah, that's my thoughts. That's my analysis. As of now, there is absolutely no reason for puts. Why? Because it's above 403.10 and it's breaking out. What would give us a reason to play puts? If it cracks below 402.42 and forms resistance and forms lower highs. That would be a reason for puts for a quick move to 401.20 to $400. Now, don't be greedy. What I do is I take one target. So as a scalper, if I'm buying puts, say it breaks below 402.42, it's forming resistance. I get in when it's at like 402.20 and I buy the 402 puts. Once they start to become in the money, I say, okay, where's the support? Okay, so your support is right here. Your support is right around this 401.30. Boom, lock in my profits, right? And then there's another support level right here. So 401.30 cracks, it goes to $400.30, right? What I'll do is I'll sell basically all my position at the first target, right? It could go lower and it could hit the second target, but if it doesn't, your puts are just going to go from being up like 30, 40% the same days to being break even. And then you'll probably turn the trade into a loss, and you don't want to do that. So I have one target. If I ever aim for two targets, I am basically risking, the profit. And if I go green to break even, then the rule is to automatically get out. If you go green to break even, never go green to red if you're up nicely. But what I would say is if you are extremely bearish and you wanted to aim for that second target, then only do it with like 1/3 of the position. So like sell 70 to 80% at the first target and then just hold the 30 to 20% for the second target. And if you're seeing strong confirmations that it's not going to hit the target, then just get out completely, right? But I don't even like doing that. I don't like doing, I identify the first support level. So if 402.42 starts cracking, the overall first support level is like 401.30s. I just sell automatically, because what can happen is this is what can happen. If you don't sell automatically at support, it instantly spikes back up and you get back all the profits. Then it goes higher, then you get stuck holding, then it goes green to red. It's a shit show. Just aim for one target. That's what I tell people, man. Keep it simple. Get one support level and then sell at that support level, sell your puts at that support level for profit. And then same thing, with resistance. Get one resistance level for calls and then sell at the resistance level for calls, right? Just one target. If you're ever aiming for two targets, you should expect to, you're literally risking all of the profit. That's what you should be expecting. So therefore, if you're going to take the risk, only risk like 20% or 30% of your position size, depending on how confident you are, and trade the charts. Don't trade the targets. Trade the charts. Do not trade your price targets. Trade the charts, right? Now, in terms of trading a price target, I automatically typically get out at the first target for the most part. If I'm super confident it's going to go in my favor, I'll hold like 20% to 30%, right? You're much better off doing that. And then you can just always re-enter at your same entry, right? Don't go expecting these crazy moves. Don't go hoping and holding for the best. Take your gains, guys. Lock in your profits. Take your scalps. You can always re-enter. SPY loves going back to those initial entries very, very easily. You know, it loves chopping around all the time. Every day is going to be different. Sometimes it's going to chop like this. Sometimes it's just going to have a big one-sided move. Don't go trying to predict what it's going to do. Just lock in the gains. Don't go aiming for everything crazy. On a nice little $1 move on a same-day expiration, you can make a quick 30, 40, 50%. And if it's towards power hour, it can be 100% plus, right? So don't go aiming too big. One target. Get out, vast majority at one target. Should be getting out all at one target pretty much. That's my thoughts. That's my analysis. That is the plan. If you want to be the most competent trader, you know, heading into tomorrow, just do that. Trade at those levels. Just do that. Don't do anything else. Tune out everything else and only trade based off those levels, based off those confirmations, and just call it for the day. Don't do anything else. I've got absolutely burnt and crushed gambling. So I got to, not do that anymore. I just got to focus on trading the best setups at the best prices, like I preach and like I teach within these videos. So this is the game plan heading tomorrow. If I do anything else, then I deserve to lose money, right? It is what it is. But this is what I'm going to be focused on, man. I'm going to focus on getting back to it and trading the best setups at the best prices. In terms of my last video, the options did not do well. It's not always going to work 100% of the time. But I am proud I cut my loss quickly on BBWI because those puts are nearly worthless, and I cut my loss very quickly. I cut it at 35%, and why did I cut my loss? I understand that's not the smallest loss. So if you were to put 10% of your account into those options and you lost 35% of the contracts, your account would be down 3.5%, right? That's how you do the math on that. But why did I decide to get out so quickly on this trade? Because the previous closing price turned into support. That is why. If the previous closing price breaks out and turns into support, so right here, it went below, it reacted as a resistance, it was red on the day, my puts were basically up a little bit, then it came back, turned it into support, formed higher support above the previous closing price. That's my confirmation to cut my loss. Boom, cut the puts at 35%. They're probably down 80 to 90% right now, right? So I did the right thing. So what I can tell you is previous closing price, think of the previous closing price as the foundation. So write that down. The previous closing price is the foundation. If the previous closing price reacts as a support level, that is bullish. And if I'm in puts, that means I have to get out and cut my loss. And that does not mean you have to switch calls, but you do have to get out and cut your loss. If previous closing price reacts as a resistance, that is bearish. And that means I have to get out of my calls if I'm in calls and cut the loss, right? So if you're in calls and you see previous closing price reacting bullish, you hold calls for a little. If you're in puts and you see previous closing price reacting bearish, you hold puts for a little. In terms of, well, how long do you hold these? I'm aiming for that one target, and the typical holds could be a couple minutes to 10 to 20 minutes max. That's typically it, right? Because I'm aiming for one target and it's volatile stocks. I'm trading during volatile times a day. So the targets can typically hit within 5 to 20 minutes. So yeah, just remember, previous closing price is the foundation. If it forms a floor, if it reacts to support, the micro trend is going to go bullish. See right here, breaks out, higher support, micro trend goes micro bullish, right? If the previous closing price reacts as a resistance and it forms lower highs, so it did try to react as a resistance, but it didn't form the lower highs. Then if it reacts as a resistance and it does form the lower highs, then the micro trend is going to go bearish. So just remember, the previous closing price is the foundation of the short-term micro trend. If you see it react bullish, you do not want to be in puts and you want to cut your loss if you're in puts. If you see it react bearish, then you do not want to be in calls. And if you are in calls, you want to cut your loss, right? So that's what I want you to understand in terms of like cutting losses, in terms of getting in. That's just what I want you to understand in terms of, well, when do you exit these things? Right? The previous closing price is my foundation. So that's what I want you to be aware of. Those are my thoughts. Those are my analysis. I hope you enjoyed this video. I strongly believe if you follow this plan and you determine with the right confirmations, I think you should be able to have a nice green day heading into tomorrow, man. Let's do it. Let's finish this week strong. Let's make the money back. Let's do well tomorrow. Let's determine the confirmations, right? Let's wait for the key levels to react and get a strong confirmation, and let's do well. Let's have a good week. Let's finish the week strong, and let's have a good Black Friday. You know, if there's something you need to buy within Black Friday, now would be the time to buy it. And let's do that. You know, let's have a fantastic week, withdraw some profits, and buy what you need. If there's something you need to buy on Black Friday, then boom, there you go. Let's do it. So let's do it, guys. Let's absolutely crush it. In terms of Trader Society, it's going to be reopening up. It's expected to reopen up the end of the year. I know some of you have been waiting on that. Right now, it's privately for members only, but in terms of the public, we are going to be reopening up the group towards the end of the year, basically like the end of the year, end of December to early January. We're going to be reopening up the group, so stay tuned for that. Right now it's closed. Nobody can get in right now, just the members who are already in. So for those of you who are within Trader Society, we're going to absolutely crush it tomorrow with the live trading, so stay tuned for that. We're going to trade the plan, and that's all we're going to be doing. I will see you guys tomorrow.